Are you new to income tax? Worried that you don't know the ABCs of the taxation when it comes to the income? Then you are at the right place. Welcome to the Enterslice YouTube channel. My name is Sobia, and today's video we will discuss the basics of income tax. And if you are a beginner, then this video is just for you. Let's begin. What is income tax? Income tax is a form of tax that is imposed by the government of a country on the incomes of its citizens, whether it has been generated by businesses or individuals, inclusive of jobs and proprietorship. However, a place is always safe for certain exceptions. Income tax in India roots its existence from the ancient times, leaving its evidence in the scriptures such as Manu Smriti and Arthshasthra. The detailed analysis given by Manu and Kautilya portrays the existence of a well-planned taxation system, which suggests that the king levied taxes on its people according to their income and outflow. It was believed that the absenteeism of taxation is as harmful as exorbitant taxes, and these two extremes shall be avoided. It should be in such a way that the payer doesn't feel a pinch while paying the taxes. Moreover, even in that era, taxes varied as per occupation and income slab, which is not any different to that of current practice. Despite the existence, there was absence of a legit set of rules to regulate income tax. Therefore, when the Military Mutiny Act took place in 1857, Sir James Wilson felt such need of defined legislation, which eventually gave birth to the very first Indian Income Tax Act of 1860. This act went through different phases of amendments and replacements over the period of time. But then, Indian Income Tax Act of 1961 is what is being practiced in the present time. Now you know what income tax is, but how will you know if you are required to pay income tax? And if yes, then how much? Let's understand this. There are three categories. First, if you are aged 80 or above and you earn up to 5 lakh per annum, then you are free from tax. But if you earn between 5 to 10 lakh, then your income tax raises to 20%. And if your income is above 10 lakh, the tax slab raises to 30%. The second category is if you age between 60 to 80 and you earn up to 3 lakh per annum, you are again free from taxes. But if you earn between 3 lakh to 5 lakh, then your tax will raise to 5%. And if your income is between 5 to 10 lakh, the tax slab eventually raises to 20%, and on above it, it raises to 30%. The third category is if you are age 60 or less and you earn up to 2.5 lakh per annum. Here, you are free from tax. But if your income increases from 2.5 to above, then your income tax raises to 5%, but only up to 5 lakh. If your income is between 5 to 10 lakh, your tax slab raises to 20%, and on above it, it raises to 30%. Let's look into some important terminologies of income taxes, such as what is previous year or assessment year. Let's understand all this term with an example. There is a girl Anna who earns 12 lakh per annum, like from April 1st, 2022 to March 31, 2023. Now, she needs to file tax in 2023. For this filing, the previous year here is 2022 to 23, the financial year you are paying taxes for. And now, the financial year in which you are paying taxes for previous year is known as assessment year. We have been talking about income, but what all sources of income are included in this domain of gross income? There are 5 heads: salary, business, housing property, capital gains, and other sources such as family pension or fixed deposit. But not this entire income or gross income is taxable. Taxable income is the resultant income after you make the deduction from the gross income. Now the question is, what is the deduction? As per Section 80 of the Income Tax Act, deduction is tax benefit which reduces one taxable income, condensing the tax liability. Consequently, the higher the deduction, the lower the tax liability. According to this section, 1.5 lakh from the gross income can be reduced, but in different manners, such as Public Provident Fund, Employee Provident Fund, Tax Saving Fixed Deposit, Equity-Linked Saving Schemes, Insurance Premium. But under salary head, this deduction cannot exceed more than 50,000. And this is known as standard deduction. There is one more popular term, TDX, or tax deduction at source. What is TDS? It is a certain percentage of tax which is deducted by the payer at the time of making payment to their receiver. And this amount is then remitted to the government. Now we know all the terms. So if you want to calculate taxes on your income and a way out for deduction to reduce your tax liability, contact us on the number mentioned on the screen. Our team of experts will connect with you. That's it for this video, and in the next video we will discuss the step-by-step guide on how to file income tax return. Thank you.